Our top and developing story today, US President Donald Trump continues to defend his sweeping tariffs despite the market turmoil and continuous calls for a trade war. He further went on saying that foreign governments would have a lot of money to lift sweeping tariffs he characterized as medicine, prompting further carnage in global financial markets. Asian markets posted steep losses ranging from Japan's Nikkei 225 dropping by 6.3% to Australia's ASX 200 which dipped by 6% and Hong Kong's Hang Seng which is down by 9.8%, as well as the US market expecting its worst fall in nearly 40 years, registering further concerns that Trump tariffs could lead to higher prices, weaker demand and a potential global recession. Indian markets also see a bloodbath with Nifty SenSex down at 4%, with small and mid caps crumbling. In Hong Kong, the Hang Seng index plummeted by more than 9% as Chinese tech giants saw significant losses, with Alibaba down 14% and Tencent losing more than 10%. Japan Renesas Electronics led the way with a sharp drop of 14.10% as of 12:50 p.m. Singapore time. Other significant losses were seen in SoftBank Group, which fell 10.14%, and Advantest Corporation, which pared its losses to 7.91%. The widespread sell-off reflects mounting concerns about the global economic outlook. US officials say more than 50 countries and territories have reached out to Washington for trade talks. Here is what the US President and the US Treasury Secretary had to say.
What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. And eventually, it'll be a country like no other. It'll be the most dominant country economically in the world. I don't want anything to go down, but sometimes you have to take medicine to fix it.
50 countries have approached the administration about lowering their non-tariff trade barriers, lowering their tariffs, stopping currency manipulation, and they've been bad actors for a long time, and it's not the kind of thing you can negotiate away in days or weeks. There doesn't have to be a recession. Who knows how the market is going to react in a day, in a week. What we are looking at is building the long-term prosperity.
With growing concerns of major financial crisis, one that's drawing comparisons to Black Monday. On October the 19th, 1987, the Dow Jones plunged by 22.6% a day. It remains the worst one-day drop in Wall Street history. Fast forward to now, April the 6th, 2025. Jim Cramer, well-known financial analyst and TV host, has issued a chilling warning. He said that we could see another bloodbath today. Cramer points to the escalating global tariff war sparked by US President Donald Trump. The president's latest tariff moves have spooked investors across the globe. Countries are already hitting back with the retaliatory tariffs of their own. Cramer urged the US president to reach out to those who play by the rules. He said diplomacy is the only way to avoid a devastating crash. Yesterday, the warning signs were clear. Dow's futures dropped over 1,400 points. S&P and Nasdaq futures fell more than 4% and 5%, respectively. Investors fear we are headed into another Black Monday. But what exactly happened in 1987? Black Monday was triggered by a mix of market forces. It had pushed stock prices to unsustainable highs. Computerized trading systems began selling automatically as prices dipped. That caused a chain reaction, triggering even more sell-offs. There was panic. No one was buying, and at the end of the day, the Dow had lost nearly a quarter. We are joined by Dr. Jajit Bhattacharya, President of the Center for Digital Economy Policy Research, located in New Delhi, and we're also joined by Nisha Shoyal Agrawalska, partner for the KG Somani LLP, located also in New Delhi. Thank you very much, both of you, for joining us. Dr. Jajic, I want to come to you first. Is this another Black Monday 2.0? Are the figures pointing to that happening again like they did possibly in 1987?
As you explained, Black Monday, one of the key ingredients was algorithm, and therefore we had a sharp fall in one day because algorithms took over and there was no checks and balances. Now there have been checks and balances put in place. So it's not that we'll have a downfall of 25% in one day, but we have had a downfall of over 35% over the last few trading sessions. Already in a Black Monday situation, but it's not happening in one day, it's happening over the last 3-4 days. The US market has lost $11 trillion. That's equivalent of 35% of the market cap. So we are facing the same or similar situation as Black Monday.
Nisha Soyal, I want to come to you next. How do you analyse Donald Trump, the US president's dealings in this entire matter? We have retaliatory tariffs from China, which obviously can be seen as stemming a lot of this crash. We also have a possible retaliation proposal, which is expected from the European Union today. How do you analyse Trump's actions in these matters?
Thank you. So I would say that, because it has the...
Hello, can you hear me? My apologies, we believe to have some technical issues with Nisha. We go back to Dr. Jajic. Can you, I want to ask you the same question. How do you analyse Donald Trump's decision-making within the past few days when it comes to his economic policy? As I said previously, these have largely stemmed from China's retaliatory tariffs that they have imposed. Also, as I said, there's going to be a retaliation in the coming days with a proposal expected today and a vote expected on Wednesday. How do you analyse both Trump's actions in this and also the European reaction and the Chinese reaction?
I think there's an element of not being able to forecast that Europe and China will react. I think from the steps that were taken, I believe there's some miscalculation because I believe the US administration did not factor in that there will be retaliatory tariffs. Their thought was that what others are saying in terms of retaliatory tariffs will not necessarily be imposed. But as we see, the reality is that many of the large economies, and European Union is almost the second largest economy after US, is actually going to put in these tariffs, and that's going to be detrimental to us. So it's a full-blown trade war that we're seeing.
Nisha, I believe we have the technical issues sorted. Waking up this morning and you seeing these negative numbers across the Indo-Pacific region's stock markets, what were your thoughts and how do you read this situation?
See, I see it as no doubt, there are negative things and there are blood math in the market. But I think our government is very strong. So, government, businessmen, and they will definitely, work out on the things and we'll have these things settled down in maybe by another 1 to 3 months time span. So, as we have seen that there are, retaliating signs, Europe and China are showing this, but I think that Indian government is working on the, we are working on this, we are negotiating on bilateral trade agreements. So we'll see, we might expect a lower tariff for Indian thing. And if you see the whole scenario, then our India is not at that worse situation than others.
Nisha, do you think people should be worried? What are the long-term effects of something like this happening?
No, I don't think that, no doubt, we can see that investors are panicking a lot, but I would say it is loss for the one who is booking it. But otherwise, it is an unrealized loss. Just if you're a long-term investor, if you have good stocks in your portfolio, then just stay quiet. I would say that wait and watch would be the best strategy at this time. Or rather, I would recommend that you should put extra systematic investment plans, extra SIPs on the large cap funds. So there is no situation to panic. Just wait and watch would be the best strategy at this point of time.
Dr. Bhattacharya and Nisha Soyal, thank you very much for joining us. We now move on. US President Donald Trump says peace talks are underway with Russia as the White House pushes